from the Geography Department, and welcome to the next presentation in our Sustainable Solutions Seminar series. This is a series that's co-sponsored by the School of the Environment, the Institute for Sustainable Solutions, and the Department of Architecture here at Portland State. Bettina von Hagen, who was originally scheduled to be with us, is not able to be with us today, but we have another visitor from Ecotrust. We have Amrita Vijay Kumar, who is the Director of Conservation Finance for Ecotrust. She has an MBA and a Master of Science degree in Natural Resources from the University of Michigan. She joined Ecotrust Forest Management in 2011 as the Director of Conservation Finance, and she brings to the table her unique set of experiences in the private sector to Ecotrust's efforts to develop new financing opportunities for conservation projects. She has considerable international experience in consulting and finance, and among other things, worked with the Climate Change and Sustainability Practice Group at PricewaterhouseCoopers in Singapore for 5 years. She's also consulted with forest carbon developers in Indonesia on investment for conservation in West Africa, and worked on nitrogen management strategies with the Environmental Defense Fund, and more recently via her work with Ecotrust Forest Management. So please join me in welcoming Ms. Kumar.
Thank you for that introduction. So Bettina had to be whisked away on work, so she sends her apologies. And I realize I have big shoes to fill, so I'm going to jump right in. Let me know if I'm going too fast, if you can't see, or anything else. Feel free to just raise your hand and ask questions if you need to. So in terms of what I'd like to talk to you about today, I want to cover 3 main things. One is to just do some level setting, give you some context about how I think about ecosystem services in the context of forestry. 2, really explain some of the trade-offs and the constraints that I face in sort of my everyday professional work environment when it comes to monetizing ecosystem services. And 3, I'd like to share with you a little bit more about the Ecotrust Forest Management approach. So with that said, I'd like to set some context for this presentation. One, I'm really bringing a practitioner perspective today. So we're really dealing with the current realities of the market, the state of banking and finance today, regulations, and all the uncertainty that brings. 2, I really want to give you the context for what monetizing ecosystem services means when it comes to private forest land investing. And I want to make the point about it being different from the public sector, from the small landowners and families that might want to practice forestry and monetize ecosystem services. And I think that's important mainly because private landowners actually own most of the forest land in the U.S. today. According to a study, a poll found that actually 60% of people today believe that forest land in the U.S. is actually majority owned by the government. That's not true. For the 20% thought that the forests were predominantly owned by the forest industry. That's not true either. So in reality, there are 751 million acres of forest land in the United States today, and 1/3 of that is owned by privately owned forest management companies like Ecotrust Forest Management. So that explains why this is important, and it explains why it's important to understand the context of private forest land investing. Lastly, I'd just like you all to put your investor hats on. Dig deep, find them, and think, I guess, practically and skeptically. And I'm hoping that at the end of this lecture, you'll take away with you some of the challenges and the opportunities inherent in monetizing ecosystem goods and services as a private landowner today. All right, so let's jump right in to our first section. So forests are, well, before I do that, you've probably heard a lot of different definitions. You've had many wonderful talks, and everybody's given you a definition for what ecosystem services are, so I thought I should just, step up and give you my own. In fact, I'm going to borrow from the USDA here. So I'm going to define in this talk ecosystem services as goods and services that flow from ecological processes that have immediate or long-term benefit to human society. And goods are generally those things that are tangible, material, and they result from ecosystem processes, whereas ecosystem services are really improvements in the condition of things of value. So like one of the other speakers said, goods are anything that I'm going to be able to drop on your foot and it's going to hurt. Services are not. So generally speaking, in the forest land investing world, goods are much easier to price than services. And I wanted to make one small point here. The chart on the bottom right really shows the change in forest land cover in the U.S. between 1982 to 1987. So when you do all the math, it works out to about 4.1 million acres of net gain in forest land in the U.S. in this time period. The question I want to ask you is, what about the change to ecosystem service provisioning during the same time period? Do you think it increased? Show of hands, yes? Great. Everyone's saying no? Yes, maybe? Okay. So, they say a picture says 1,000 words. So let's look at this one. I think the point that I would like to make is forest land management practices really influence the provisioning of ecosystem goods and services. This is a wonderful picture that someone in Ecotrust or someone who worked with Ecotrust drew for us. It's a picture of ecosystem goods and services that in the context of a sustainable management regime. You can see here sustainable stream buffers. You can see the increase in biodiversity, the opportunity for recreation via fishing. You can even see renewable energy there in the background. And all of these are just indicators of a healthy ecosystem. By contrast, let's look at an illustration of what might be in the case of what we like to call industrial forest management practices. These are forest management practices that exist today that are very common in the industry. And it looks bleak by comparison, doesn't it? It's really focused here. The forest land manager is focused on productivity. That means producing biomass, maximizing the production of timber, and making sure that he can get the most out of the land as he can over the given time frame that he owns the property. So it's likely that forest cover will recover quickly, but will the fish return? Will the water quality improve? And will the forest support biodiversity? It's probably unlikely. And it's usually in these cases where I like to ask the scientists what they think. And so here are a couple of 2 data points. They're one of many. The chart on the left is a study that Ecotrust actually undertook. It is difficult to see, but really what was going on here was that Ecotrust aggregated land owned by small property owners, about 1,238 acres. So it's a really small sample. And they compared what FSC certified management, so FSC is Forest Stewardship Council. It's really the benchmark for sustainable forestry internationally. So we compared what managing forests under the FSC forest management regime would do to carbon sequestration, which, as you know, is a very valuable ecosystem service. So the line on, the top here, the green line, really shows you what happens if the forests grow without any sort of harvesting regime whatsoever. The red line shows you the forestry regime under the business as usual scenario. So this is industrial forest management. The dotted pink line is really the baseline that the FIA sets for carbon sequestration for that particular forest type in the region. As you'll see, there's a high variance between what FSC forest management does and what conventional forest management does. The chart on the right is another data point for you. 3 scientists studied the impact of what they call restorative forestry. This is essentially lengthening rotation regimes, lengthening the time between basically when you plant and when you cut trees. And so they looked at 3 indicators of ecosystem health: vertebrate density, forest flow functioning, and ecological productivity. And as you'll see, the results are quite clear in this analysis as well. So I guess what I'm trying to say here is very simply, yes, forests do generate immense value, but healthy forests generate a lot more value in terms of ecosystem services, goods and services. We at Ecotrust are actually also currently thinking about not just ecosystem goods and services, but the job creation capacity that the different styles of forest management have to offer. Does the sustainable forest management style yield more jobs? So that's a question that we'd like to answer. Here are, just for the benefit of everybody here, I'm sure you're all very familiar with this already, but just for the sake of level setting, I've listed out a bunch of different forest ecosystem goods and services that forests provide. Climate change mitigation, you're familiar with this one. Water filtration, so forests really filter pollutants from upstream agricultural or industrial runoff. They provide fish and wildlife diversity, and most recreation for you and me, and temperature and water regulation, which is becoming really important. And most importantly, food and income. I mean, it's easy to forget that there are very tangible goods like timber, and the forest products industry is very, very large in this country and globally today. So what is the value of forests? Well, it's been very hard to get a good quantitative number. The best number that I have found is a study by TEEB, which is a nonprofit research organization, that basically estimated the value of just the carbon sequestration ability of forests alone, so discounting any of the other stuff. They valued forests globally at $3.7 trillion in today's NPV terms. So that's a big number. Makes it sort of, when you think about the bank bailouts, it gives you a good reference, doesn't it? It's just net present value. So basically discounting the value in the future to today's terms. That's what it is. So moving on. Here's another really interesting study that the U.S. Forest Service came up with, I think late last year. They did an incredibly useful analysis where they published a tool that lets communities, you and me, see which forests are really important to you as a drinking water resource. The only limitation here is that it only covers surface water and it doesn't cover groundwater, so that's a small gap. But it really becomes, I think, incredibly useful because you can now put financial value to forests in a watershed that a city utility forest manager can understand. So so essentially the dark blue are those forests that are extremely important to surface water and drinking water to communities. Here's another interesting statistic that the USDA put out. About 66% of this nation's freshwater resources originate on forest land. That's a really startling amount. I actually didn't expect it to be that high. And moreover, the cost of treating drinking water actually increases 20% for every loss of 10% in forest cover in a particular watershed. That's opportunity cost. And when we start being able to think about the opportunity cost in these numbers, we can really start valuing some of the services that watersheds provide. So I guess I'd like to end this section with really wondering out loud. Today, if 60% of forest land in the country is owned privately, why is it that in the next 25 years we're going to lose about 44.2 million of this to other uses? If forest land is so valuable and it does provide all of these wonderful goods and services, why are private forest landowners converting them? And that leads me to my next section. So let's put ourselves in the shoes of a private forest land owner. Imagine that you own forest land in the U.S. Essentially you're trying to maximize your income from that forest land in the form of timber or whatever other way you should choose to. So here's and then let me just step back and give you some context for how you can think about that. So the reality is that today timber as a commodity has become the de facto proxy for forest value. What does that mean? Well, let's think about why that's so. And usually the economists here in the room will say, that's easy, let's look at supply, demand, and And then I'll say yes, and then let's also look at tax implications, and let's look at what Wall Street had to do with that. So demand was really a simple indicator to look at. In the last 20 years, demand from emerging markets, China, Brazil, India, and Southeast Asia has really exploded. And demand for timber has become such an important part of this country's GDP, is that now the U.S. is exporting a lot of its timber when it didn't used to do so before. A number that I like to give people for context is the housing starts number. Any guesses for what the average annual housing starts number is for China today? Guesses? I'll give you context. In the U.S., it's about between 1 to 2 million in a healthy economic environment.
I was going to guess 5 million.
5? Any guesses there? Okay. Well, the number is between 10 to 12 million. That's how much China is influencing demand today. Supply. Well, supply is another interesting part of the equation, because even though demand is increasing, supply hasn't increased to that same level. Land scarcity, growing pressure from agriculture, regulatory oversight, and increasing public scrutiny in tropical nations about deforestation rates is actually reducing the amount of available land for commercial timber production. And so the result of this inequality is really that timber has become it's a great commodity to own. It's becoming a financial asset. It's increased in price, and I'll show you a chart later on, steadily for the last 20-something years. People are forecasting that price to keep increasing. And the other interesting thing, and that has really resulted in what was really an unprecedented change in ownership in this country in the last 30 years, where we saw forest land moving from commercial forest product companies to private, financially motivated owners. And that change is really drastic. About 84% of all privately owned forest land changed hands between 1996 and 2007. And really that was, I think, primarily driven by Wall Street and tax inefficiencies that they claimed was inherent in the, combined ownership of timberland and forest products assets. So what does that imply for us? That really the move to financial ownership has really intensified forest management practices today. That's why we're seeing shorter rotations. We're seeing plantation forestry. We're seeing monocultures, and we're seeing non-native species being planted with even-age management regimes. That's sort of becoming the de facto management of forest land today. So that's the context for your owning this forest. And as a forest land manager, you and I have a choice. We can either grow timber, or we can choose to trade off timber against, And we can, so like I was saying, we can grow timber, or we can choose to trade off timber against some of these intangible goods and services like water quality, for example. However, the market signals are quite clear. The chart on the right really shows you the price movement of timber. We've seen that price pretty much holding steady between $400 to $500 per 1,000 board feet, even in this market, which is quite depressed. And as I said, really that's really driving your decision as a forest land manager. The second thing that's really that influences your decision making is something called the forest land appraisal process. This was quite interesting. It was something new to me that I didn't really know. But essentially, value isn't determined is really determined by a third-party appraiser, and that appraiser needs to apply what is sort of a very conventional form of thinking, where he's basically valuing the land on the basis of what a rational investor would do to that land. So he's really appraising the value based on what any rational investor would do, which is grow your forests in 35-year cycles, manage it extremely intensively, maximize timber production, and that's what the whole value creation aspect of forestry is really reliant on. Forest land is a level 3 asset. What that means is it's very illiquid and there aren't very good price signals. As a result, if you're a private forest land manager, you're really relying on the appraiser's valuation for and they're the indicator for how you manage your forests. And finally, the other thing is sort of thinking about, as a forest land manager, if you wanted to, for example, sequester carbon on your property, it's really interesting, but there's very little legal precedence for what that would do in an appraiser's mind to the value of your property. So today, if you decide to certify your forest under the California carbon standards, it comes with a PIA. Essentially, what that is, it's a legal, lien on your property that travels with a title. Essentially, what that's telling the appraiser is that this property has been, in his eyes, impaired because you're giving up the opportunity cost of carbon, and that goes on from one owner to the next, and California requires it for 100 years. So, I don't know, when you're thinking about implementing that carbon project, that's definitely going to be something that you're going to think about. And lastly, the interesting accounting treatment of harvest depletion. Depletion is much like depreciation. Essentially it's an accounting treatment, and you can deplete your forest land for both accounting and tax purposes. What it does is it allows you as a forest land owner to take a cut or reduce your taxes essentially for the amount of depletion. So if you're motivated financially and in your yearly return post-tax is important, then you'll want to have a regular depletion on your books as well. So I think the other thing that I wanted to do is to give you a little more detail, and I hope I'm not disappointing a lot of you today. But I wanted to give you a good sense of what the real realities are when you're developing these projects. And this, for example, is really what a forest land manager faces, the uncertainty that he faces when he's evaluating a carbon project on his forest land. So in addition to all of these factors, what it would involve is really, let's say, a change in the management regime, perhaps extending rotations, increasing reserves, or some combination of both. And in evaluating this proposal, what you're going to find is that you're plagued by uncertainty. The rates of carbon yield differ across different species, different site classes, different regions, which is fine. You can find out what those are, but there's very little scale in that if you own forest land in many different regions. The opportunity cost, we touched upon this, is really high because of the price of timber. And the additional costs of managing carbon and verification out into the future add more cost to your general property management. I mentioned earlier it places an encumbrance on the property which moves with the title, so you really have to think about value considerations. Analytical methods used to account for carbon changes over time are still contested, and different methodologies are used by different standards, so there's no certainty. Discount rates are really high. That's a touchy one, so we won't go into that a little right now. And policy mechanisms. So, regulation is still uncertain. The rules of the game aren't established. They're in flux. So how do you make decisions when you can't insure yourself against risk or can't be sure you can achieve the rate of return that you promised your investors? So in summary, the argument against, or let's say just in summary, what are the challenges that you face when you're developing ecosystem services? And is essentially opportunity cost. Timber is worth more, so why do it? The emerging opportunity for ecosystem services, monetization involves taking an additional risk. Why bother? It's difficult. It's time consuming. The reward is uncertain. It's too small. It requires regulatory demand or private demand in the form of capital. It requires changes in appraisal methodology, legal precedents, and that just takes too long. And it requires market infrastructure, third-party measurements, certification, insurance mechanisms, market aggregation. I mean, all this takes time. So let's not do it. Well, I think it's about time to flip and talk about explain sort of the argument for why it's important to do this and why it's still possible to do this. So the best way that I can do that is to perhaps illustrate the approach that we use at Ecotrust Forest Management when we think about how we want to manage forests. So just to give you some context, because I realize not everybody is familiar with the organization and who we are, we're a private forest land investment manager. We own and manage properties on behalf of our investors in Oregon and Washington. And really, we were formed by Ecotrust in 2004 as a response, really, to all of these unprecedented changes we were seeing in the marketplace. So what were these changes? Like I mentioned, we were seeing forest land rapidly changing hands, and that was creating to us new acquisition opportunities. In 2002, conservation buyers were the highest, or they bought the most property or they bought the most forest land. Intensification of forest management practices was fueling really a strong desire for an alternate model of forestry, and we thought that we could provide that alternative. The demand for sustainable wood and the creation of green building standards in the form of LEED was creating new demand for a high-quality product, and we hoped a price premium as well. The growth of ecosystem markets was really opening up new possibilities. We didn't know what they were. We fully understood the risk and the uncertainty, but we knew that there was opportunity if we were able to, figure out how to make the most of what we had here in the Pacific Northwest. And lastly, but very importantly, there was a growing appetite for what we call impact investments. Essentially, people that cared more about financial returns. They really cared about how they achieved those returns as well. And so in summary, our forest management philosophy is really about seeing the forest and not the trees. We believe that it is possible to generate competitive, long-term, risk-adjusted returns, while at the same time providing conservation benefits and economic opportunity to the communities in which we work. How do we do so? We have four main principles. We employ what we call an ecosystem-based style of forestry that mimics nature. We manage for an array of forest products, not just timber. So it isn't a maximization strategy, it is an optimization strategy. It's an optimization strategy where we are making decisions all the time between should we grow this stand for timber or should we grow it for carbon? Should we conserve this stand for recreation opportunities or cut it down for timber? Most importantly, we focus on monetizing these public values that are produced by our style of management, and I will explain how. And finally, we do realize returns by strategic sales to long-term land stewards. So let me go into a little bit more what ecosystem-based forestry means. Our goal really is to build long-term value through the development of a multi-canopy, diverse, structurally complex, healthy and productive forest. Notice all the various verbs I use them very intentionally. And the four main principles that we use to deliver on this goal are mainly reserves, rotations, retention, and resilience. So reserves are essentially setting aside ecologically sensitive areas, creating a rich source of native habitat, landscape connectivity, and voluntary stream buffers. Rotations, we are lengthening harvests. We're allowing our heavily cut over forests that we acquire to recover, grow larger, and therefore become more valuable, because larger trees are more valuable in the market today. Retention, the style of silvicultural treatment that we use on our harvests are things like variable retention, thinning, and patch cuts. All of these are basically mimicking the natural disturbance regime in this region, which is wind. So we want to the idea is to mimic what nature does. Finally, resilience. We manage forests to increase their resilience by enhancing species diversity, structure, and age class distribution. Now, that not only increases ecological resilience, but we believe it increases economic resilience. Because when we plant one species, you're running the risk as a forest land manager that 30 years from now, that species may not be economically in favor. The Chinese love hemlock. Who knew that 30 years ago? And so if you plant different species, not only do you diversify your income streams, you're just diversifying your risk as well. So here's an illustration of what harvesting on Ecotrust forest lands actually looks like. On the left is the conventional post-harvest scenario. You'll see that was a pretty nasty clear cut. And on the right, is a picture of the of a harvest that just took place in November on one of our Ecotrust forest management lands, and you'll see all the patchiness and all the and how it's meant to really mimic wind disturbances. So that you're probably wondering about what this means for returns and for income revenue streams, because it's quite obvious that we cut less. We're leaving behind more, and we're cutting less. We're letting our trees grow bigger and hopefully more valuable. So how are we making money? Well, this is just for illustration purposes. It's just to give you a sense for where and how this might play out. So on the right is really the business as usual scenarios. If you were a forest land manager and you manage just for timber, you're getting your revenue mainly from timber income. You're getting it from capital appreciation, and you're getting it from maybe some development sales and parcelization and real estate development. But those are your main income streams. On the other hand, we believe that depending on the type of property, so if it's a young property and it's going to grow very fast, then with a combination of other revenue streams, mainly in the form of conservation funding, new market tax credits, that's the NMTC, and capital appreciation, we can make up the difference. So our style of forestry basically results in a 60% or so, just for the sake of argument, about 40 to 50, maybe even 60% less than what you would conventionally get. And so we make up that difference mainly with a combination of conservation funding, easements, carbon credits, and new market tax credits. So here's an example of what that looks like on the actual properties. You'll see 3 pictures on the left. One is basically a replacement of a bridge. And essentially there what we're doing is we're managing for water quality and salmon habitat. We were able to replace this bridge, and we were able to get it grant funded. We were also able to get grant funded log placements and stream buffer plantings. We were able to enhance the riparian zone plantings, and we were also able to get our pre-commercial thinning, which is basically type of treatment that you do to remove some of the more brushy trees to release some of the other trees that allow the bigger forest canopy to take over. And we were able to get a lot of these grant funded via small landowner programs. And we're hoping that we'll also be able to access capital via mitigation banking and conservation easement revenue streams, as well as carbon in the future. So those are just high-level illustrations of and pictures for what forest management looks like. And in terms of specifics, there are very many different pools of capital that are possible to access as a forest land owner. The goal that we have is to identify properties right from the get-go that have a very strong conservation feature and have very strong connectivity to other lands that are either publicly owned or that are joining to tribal owners. And then you're basically doing what everyone else is doing, is trying to access the very difficult to access public funding via programs such as Section 6, Land and Water Conservation, OWEB, the Watershed Restoration Initiative, etc. And this is an extremely difficult process. It's a very high-touch strategy. And that's why conventional land forest owners don't do this. We believe that the returns can go anywhere between 5 to 50% of a property's value. The other very natural strategy for us to use on our forest lands is carbon sequestration and managing our forests for carbon. Why this makes sense here in the Pacific Northwest is mainly because of that chart on the top right. It's very hard to see, but essentially what you need to see or know is that the top two lines that are sort of the runaway lines, the one in blue and pink, is the native ability of species in this part of the world, so Douglas fir and hemlock, to sequester carbon. It's far more than any of the other species that grow in the U.S., which is why it makes this particular strategy work in places where it otherwise wouldn't. Here's some press. Essentially, about 2010 or a couple of years ago, we announced our first carbon transaction. We're excited about the markets opening up in California, and we think that will be another really big opportunity. So why is this even feasible? Like I mentioned, the resource here in the Pacific Northwest is extremely unique. It's home to very long-lived types of species that can easily grow up to 300 years. They've got superior biological growth. And what's great is that they're commercially valuable as native species. You don't have to plant an invasive species, which makes this particular area very amenable to the type of forest management that we want to practice. The quality of lumber, essentially the style of management that we practice enables us to grow bigger trees that are essentially more valuable. And the other aspects are really more operational aspects, which is basically lower fire risk, good location to access export markets, and a very well-developed mill infrastructure. So that's summarized by going through these arguments again. If I was a forest land investment manager, and knowing that all that you know, maybe putting all of this together will be helpful. So if the opportunity cost is too high, or the value of timber is worth more today, why do it? Well, do it because the price signals for non-timber products are rapidly catching up. And for us, that's really in the form of carbon. Analysts are projecting carbon from the California market, which is set to go live as early as next year, to be in the 30 to 40 range by 2020. That's pretty high. That would be really exciting. The emerging opportunity for ecosystem services monetization involves taking on an additional risk. Why bother? Because some investors are actually demanding access to this new asset class. People are thinking about ecosystem services as an investment opportunity. And we're witnessing, and as witness to that, we're seeing investment funds that are focused on ecosystem services, green carbon funds, and wetland mitigation funds actually being able to close capital raises in this market. That's a good indicator. The reward is uncertain and too small. Well, maybe that will change with regulatory demand from California. But what's really important is that we're really seeing that new type of capital, and we're seeing demand from impact-oriented investors that are seeking triple bottom line returns. This strategy gives us a competitive edge when it comes to raising capital, and so that's significant. Nothing's really going to change with an appraisal methodology very soon, but again, Californian carbon markets and the fact that there are going to be many more forestry projects because of these markets is going to quicken the process. And finally, market infrastructure, you've heard from all the other speakers. It's in rapid development. The Willamette Partnership, ACR, and their new insurance mechanism for forest carbon buffers. Mission Markets is an aggregator. It's essentially a platform where you're going to be able to transact in ecosystem service products. All of that is really exciting. So I want to leave you with, a hopeful picture. And I'm happy to, take any questions.
How do you manage contracting out for the forest extraction, and do you have things like permits? I mean, does Ecotrust manage that, and do you have permits for things like non-timber forest products?
Yes, it's like most forest land owners, this space is extremely specialized, so a lot of it is contracted out. It's forest property management, harvesting, most of that is contracted out in general in the industry, and we're no exception. Permits for the non-timber aspects in particular are really, I guess, not extremely developed, except in the case of carbon. Essentially, you can make up the permit in the form of an easement, and so that's a legal document that allows you, that basically states that you intend to encumber the land by growing and sequestering carbon.
Hi, I had a question about the forest carbon offset and the carbon market, which you mentioned. I've read a little bit about the California carbon market proposals and some articles about, well, various articles about one questioning whether there's going to be a carbon bubble and the very real possibility that the price could lower. And it seems like, to me, a fragile argument if you're basing it on making money all the time. If it's based on, a very volatile market where people are trying to really just make money, and so it can lead to like a speculative bubble similar to the other financial speculative bubbles that we've experienced. I'm curious what Ecotrust or what you think about that possibility. Yeah, I'll leave it at that.
Yeah, no, those are really good observations, and like any new market, the moment you put a price on something and you allow people to trade, you're going to create. You're taking away inefficiencies in the market by allowing sort of price signals to emerge, but you're definitely also allowing for bubbles to be created. You have a real estate bubble that happens very naturally as well, and so I don't think there's any getting away from that if you create a market. As an investor and as a financial owner of a forest land, you have to be aware that that's going to happen. So there are different ways that you can protect yourself. You can engage in things like forward contracts for carbon, where you're basically setting, you're agreeing to a price today that would work out into the future. So that's one way to protect yourself from upside or downside. And the other thing to be aware of is you're not basing the entire strategy on carbon. It's, like I said, a really mixed strategy. You're going to manage some of your land and some of the property for carbon. You're still managing for timber, and you still have the option and the optionality of accessing all of those different revenue streams. Is where I think the creativity and the unique competitive advantage between one manager and the other will actually play out.
Thanks. That was a great talk. You mentioned that you were considering pursuing some conservation easements. Mm-hmm. What methodology or what methods were you hoping to initiate that through land trusts in the region or national programs? Could you speak a little to that? That would be great. Thanks.
Yeah, sure. As you know, conservation easement funding is very hard to come about in the West, so it's definitely hard. But yes, all of the sources that you mentioned, land trusts, would be a natural sort of source for that funding. There's different ways to access easements that may come with mitigation banks and water funding, EPA water quality funding, and so we're sort of exploring all of those options.
Can you explain what new market tax credits are, and also go into more detail about some of the conservation funding that's available, like OWEB, and how does that funding work?
Excellent question. New market tax credits are very, very interesting animal, and it's a lot of brain damage, like people like to say, but essentially what it is a federal program that is incentivizing capital, tax equity capital. So they're basically incentivizing capital to flow into distressed, low-income communities. And the idea is basically, as in exchange for capital to flow into a very low-income area, the federal government is compensating investors in the form of a tax write-off or a reduction in their tax bill. So that's essentially what a new markets tax program is, and you can use it in many different ways. And one of the ways in which we've been able to use it is because of all the land that we acquire is in these low-income areas. We're able to access some of that as well. And the other aspect was about, did you mention water quality and OWEB funding? Was conservation funding. Yeah, I think those the sources that were listed earlier are really the main sources that we're looking into. It's all of it is sort of publicly available, and some of it is available to small landowners. So really, the Land and Water Conservation Fund, Forest Legacy, the Oregon Watershed Enhancement Board, OWEB. That's another pretty good source. And really, it's just being creative about understanding priorities that the administration may have, and figuring out right in the beginning when you're acquiring land why that would be important and to whom. If you're acquiring land around municipality watersheds, perhaps there might be really creative ways you could monetize water filtration opportunities. And so really thinking about that strategically upfront at the time of purchase is something that would be quite thoughtful.
I guess I don't need to probably go up to the mic. I'm wondering if you've done any work around the taxing of log shipments going to Asia that could maybe kind of level the playing field as far as the conventional forest management practice versus the style that you guys are trying to do. How that would factor economically to maybe kind of slow down the overexploitation and you know the short turnaround as far as you know those incentives there for kind of poor management techniques. I know that they've been trying to work on convincing Governor Kitzhaber to increase a tariff or to have a tariff on log exports to Asia. So. Yeah,
I can't say we have a perspective on it, or I personally have done any work or research in that space. I do know that it would probably be welcomed by local mills and places that rely on timber supply locally. But yeah, sorry.
Okay.
First of all, excellent talk. So we've talked about two environmental services or ecosystem services that are being compensated, the carbon and then somewhat with the water. But there are other ecosystem services that well-managed forests provide as well. Soil quality, species diversity. Do you foresee or can you imagine an effective and efficient market-based way to monetize those ecosystem services?
Yeah, it's a tough one. It's everyone's dream, right? You want to see markets for spotted owl, and you want to see a mitigation bank that would enable its conservation, and that's not too far from reality. Maybe that will happen soon. But I guess, rhetorically speaking, the question to ask is: are markets the best way to achieve the outcomes that we want to seek, or is there a more nuanced, creative way to think about how we might be able to achieve the same goals, outside of markets, so in the form of incentives and conservation taxes or incentive programs, as opposed to creating a market where you're buying and selling and trading. I guess because markets are probably good when you have an excludable good or service, and not all of these things are really excludable. So I guess that's one thing to keep in mind. But no, absolutely, I think we're not too far away from having. We already have mitigation banks or species banks. They're not in Oregon and Washington. There are a lot of them that are in California. So that market is already developed and developing, especially in in the East, in Texas and Louisiana. So, yeah, I'm hopeful. Okay. More questions?